Hello everyone, welcome to the newsletter for December 13th. I'm extremely happy to announce that we have launch. We have the first implementation of the Check on Chain charting website, which is a huge milestone, to be honest. It's something I've really been working for, to try and get out to you guys for a very, very long time. And with the help of Cryptomaniac and Mav, we've finally got this thing live that you can actually access via the RSC portal. So happy days. It's the first implementation, so I'm sure there'll be a few bugs and things that we catch along the way, and I've just done a fairly significant, you'll see here, fairly significant update to all of the charts, but more or less, there's about 90% of all my work is on here. And once we really get this fleshed out and get all the descriptions and things lined up, so at the moment it's got all the charts in there, I've just got to go through and clean up some of the wording, but for the most part, all of the actual charts themselves are there. And the next steps will be to, there's a whole lot of different charts and data sets that I've had on my mind to pull in and start building additional information for. So, there's a whole bunch of new things in the pipeline. But what I figured it'd be a good opportunity to just show you a little bit around the site, and in particular, go through some of the charts and give you an update on what's happening in both BTC and Decred at the moment. Because there is, there's a lot of people talking about pullbacks at the moment. And I'm going to be perfectly honest, my view is we're going up from here. I really do not think that there's anywhere near enough bearish selling. There's not enough people to push the price down, in my view. I think the buy support is just simply too strong. And very interestingly, some of the on-chain metrics that we'll go through in a second, they flashed like they wanted to go down, and they've now turned back around for Bitcoin. So overall, I'm extremely bullish, and I would actually echo that for Decred as well. Again, who knows whether it's going to perform against Bitcoin. I think Bitcoin's probably going to suck the air out of the room once it goes through all-time high. However, all of the on-chain sentiment for DCR is looking pretty positive. So the way that the site is laid out, more or less, this is just a more fleshed out version of what we have at the top here. So in terms of your navigation, each of these different sections, so I've broken them down. So for Bitcoin, we've got our magic lines, a few others in here. So this is all essentially moving averages and various implementations of that. You'll also find under here probability histograms. So this one might be useful for you. This has actually got more than just the magic lines. This has got a whole suite of them. So Mayer multiple, MVRV, stock to flow, Pure multiple, and the difficulty multiple. And for each one, there is a histogram and a inversely colored cumulative distribution function. So histogram to the left, distribution function to the right. So when you combine this with any particular metric that you're looking at, and this will calculate, so the data that shows up here is using whatever the latest information is. So for Bitcoin, this won't change very much. In fact, for most chains, this won't change much, but essentially this has the entire history of data, and every day that passes, it will add more data to the set. So it really is the complete analysis, and you can pull off your probabilities for any particular metric. And the more that we develop, the more of these we have. So my view is that these probability functions, these are ultimately what I think gives us the maximum edge. So there's lots of people who can look at these different metrics, but what these probability functions do, and then I'll show you some of the ones where I've put translated them back to pricing bands. This to me is the edge that we have at RSC that I've just not seen anyone else talk about. I'm sure quants and stuff have it. But they're hedge funds and they've got stacks of money and they're not retail. So I think this is the edge that we can really apply over the market, and it most definitely puts us in the upper end of retail investors. So we've got our magic lines and the investor tool, which you might find interesting. This is really your catch the top and accumulate the bottom. So clearly we've had our accumulation shots, and ultimately the next stop is we're trying to get somewhere up here to these market tops. So again, with all of these things, much like the CHOP index is actually a really, really good framework to think about and use in the way you look at on-chain metrics, because just like the CHOP index, because on-chain is so slow, if you have a large expansive move up, which we've had, the longer that it stays up there and consolidates and essentially chops around, right? It's got to go through the consolidation phase. The more likely some of these metrics are going to catch up. These long, slow realized prices and 200-day moving averages, 200-week moving, all these really, really slow metrics that we use in this on-chain suite, they will have time to catch up. So very, very much like the CHOP index, if we get really nice stair stepping and then a very long consolidation and then the next leg up, it's going to give us a far better, we're more likely to go further, longer, and harder if we can actually slow the thing down. So the faster that we go, and you can actually look at this in 2012, the more vertical you go, the faster and angrier the pullback's going to be. It's common sense. But ultimately, on-chain is very much about that. It's about this: do we get this long, slow move, or are we really, pushing the envelope and going hard? So, this at the moment is telling us 43,000 or 43.6. If we were to just moon right now, the longer that this spends, the longer that it takes to get there, the higher this is going to go, because this is essentially taking the 2-year moving average, the 370-day moving average as our accumulation phase, and it's multiplied by 5, which again, it's an arbitrary value, but historically that's given us a reasonable top. So the longer that the 2-year moving average, the more distance we get, and the longer we spend above it, the higher that's going to go, and therefore its 5x multiple is also going to go higher. And you can see that we're starting to trend higher. So this is again positive. And just for reference, I'm currently looking at this website on my GitHub. So I don't have, Cryptomaniac has built a script that when we run it for the RSC site, all of these bands, this nav bar will sit up the top of each of your charts. So at the moment I have to use the back button in my browser, but in the full implementation, this nav bar will be at the top. So under the realized value, so this is BTC realized value, you'll see this for a lot of these metrics. It'll have one that's called valuation and one that's called pricing. Now valuation is essentially the y-axis will be market cap, realized cap, price times supply. So this will be the full network valuation. And the reason that these are different, so when you have a price, so price is obviously static. It doesn't matter what the coin supply is, it's more or less irrelevant. The price is the price. Now, if the coin supply back in 2018 was, 17 million and the supply now is 19 million, you actually have a difference in market cap. So the market cap, because of coin issuance, actually hit all-time high before price did. So we have a little bit of a difference here. To be honest, for most of what you're trying to look at, if you're looking at on-chain analysis, it just provides that extra sweet. Sometimes, I've basically installed both valuation and pricing for most of these things where relevant, because sometimes it's more relevant to look at one than the other. But by and large, they tend to tell a fairly similar story, and it kind of comes down to, what is the scale that you're looking at? Do you care about network value, or are you caring about just price? In most instances, pricing will probably do the trick. And the nice thing about it being pricing, so here, we can look for when Bitcoin reaches 700 billion network market cap, and ultimately you need to then divide by coin supply to get price. So in this instance, it's still useful because we talk about network valuation. If you're comparing Bitcoin to, say, let's look at how many PayPals it's worth, or let's look at how it is compared to gold. That's how you can start saying, okay, well, 700 billion or $1 trillion market cap, what does that look like relative to its competition? So quite often valuation is good when you're looking at a very, very big picture. Where does it fit in the whole mix? Like if I look at this now, I know that this $716 billion, it's very likely, in my opinion, that Bitcoin's going to become more than $1 trillion asset during this cycle. I would actually suggest it's going to hit a multiple of $1 trillion, would be my gut feeling. So 716 billion to me feels like this is going to curl up higher. And if we then look about where we are, we're touching into this blue line here, which is our selling level. There's 15% of history that's above it. You can see that in this early bull market back here, we touched it 1, 2, 3 before we broke above, and then basically held that line the whole way forward. So we're clearly testing this again for the second time. I would actually suggest that we're probably in this realm here where we're getting ready to punch through, and then it's off to the races. So let's jump back here. Realized value. So we've got our MVRV valuation and pricing. Let's just quickly have a look at the pricing band. So that represents at the moment 20,000, right? Dead on. So ultimately, once we break all-time high, we've got 15% of history based on the realized price that's ever been higher than that. And you can see that the times when we have been higher than that has been in this late stage bull market, likewise back through here and then back through here. So if we do manage to get up above 20,000, essentially once we break all-time high, if we hold above 20,000, we are now moving into the second stage of this bull market. That would more or less be the thesis that I would take away from this. And you can see that from this oscillator value, there's the late stage bull here, here, and here that was actually above this. You'll notice that these red bars, so in all of my charts, the green bars, there'll normally be two different shades of red and green. They will correspond to these points up here. So the same level down here that is, this is a MACD multiple of 0.7 on the strong buy, that will correspond to this guy here at strong buy of 0.7. So there will always be a corresponding band that connects to these color plots, and it just helps you identify where you're actually in the hot zone or in the buy zone. So that's on the realized value side. We'll look at unrealized profit and loss. So this one was quite interesting, actually. So the unrealized profit and loss is where you take the difference between current spot value and the realized price. It's essentially, if you assume that the realized price is everybody's cost basis, then if you start looking at what is the difference between current price and market cost basis, it gives you a bit of an idea about how profitable the market is, right? To what percentage is the market in profit? And what this is, so in fact, what you could look at this as is the whole market is at 60% profit, right? 40% profit, 100% profit. And obviously because coins move, because people are trading, they're moving them around, they're selling them, they're moving coins. Ultimately, we don't, in reality, there will be a lot of UTXOs that are in substantially more than 100% profit. But on aggregate, when you look at the total network supply, this is essentially where the market is sitting. So you can see that previously in previous markets, we obviously had an accumulation phase in green. We had our, what I would call almost the disbelief phase here in this blue zone. This is where the market's a little bit unsure. It's broken out, but we've still got PTSD from the bear market that we had previously. And what was interesting in 2017 is we actually had a fairly substantial rally that kind of nullified that. But you can see that period, this blue zone actually did persist. So even though this was what I would classify as an anomaly, where we broke up quite high, we then had about a year-long bear market that followed that. So ultimately, this blue zone through here, to me, very much resembles this zone through here. So it's almost as if we had a bit of an anomaly in between, and now we're heading into this second phase of the market where we're moving into the optimism, and now we're actually into the belief denial phase, right? So obviously denial is when you're on the way back down, belief is when you're on the way up. And that actually sounds like what we're seeing in the market. Belief is actually what I would say is the right sentiment right now. We're seeing, Michael Saylor is going and taking $600 million worth of debt now, and people are paying to do it, which for whatever reason, for 0.75%, which is just madness. But besides the point, we've got a huge amount of people coming on board. On the macro environment, we're seeing Paul Tudor Jones, Stan Druckenmiller, all of these hedge fund managers. I can't listen to a single Macro Voices podcast without Bitcoin being a 20% segment anymore. So I really do think the belief is the exact right terminology for where we are. Now, you can see that phase held for most of the bull. We got an initial peak, and then we got that pullback here. But essentially, this belief is kind of the definition of this late stage bull market. So if we manage to hold this is again confirming, I think it was a few weeks back, we said, are we in the middle of the bull market? I really do think we are. To me, we are somewhere around this zone here where we're just about to commence the acceleration north. So that, there's a lot of things really lining up, but I just think there's so much buy support in reality underneath all of this. I just think we're in a bull market. We are in the belief stage. I think it would be very, very difficult to go much further down. I mean, I just could not imagine a capitulation event unless we get some seriously, seriously bad news, like an all-out war with, the US and China teaming up to try and kill Bitcoin. And unless we get something like that, I really do think that the buy support's going to hold, and I think the probability of that is rapidly diminishing. So I think belief is really the correct emotion to be attributing to where we are right now. And here's one so these are relatively new, and to be honest, I'm amazed at the signal these things have. So I've recently put on, so this is the market realized gradient oscillator. Lots of words, bit of word salad there, but what this is essentially saying, let's just zoom into the chart and we'll talk through what's going on. So for those of you who are not mathematically minded, a gradient, when you're looking at a line like this, is essentially saying how steep is the slope. If we take a point, let's use these grid lines. Let's take a node here, this grid line, and this node here. What is the slope of the line between those points? So what I'm now doing with this 14-day is I'm saying, let's take, wherever we are, let's assume that we're here in February 2017. Let's go back 14 days. What is the gradient of the line? Now, this is the realized price. Now, Obviously, when you're in a bear market, your gradient is more likely to be on the downside, right? It's more likely to be bearish, so it's going to be a negative gradient. If you're bullish, it's going to be a positive gradient, and the more bullish you are, the steeper the gradient. Now, you've got two different gradients going on here. You've got the realized price, which is relatively smooth, right? It's slowly varying from bearish and it's moving up into positive. Now it's getting very positive. Now it's going, to the moon. And then in between that, you've got the market price. Now, the market price, as you can imagine, is volatile. If you measure from this point to this point, or you measure from this point to this low point, or this low point to this high point, it's going to be all over the place. And if we now zoom out, you can see that's essentially what we're getting here. So let's go through these one by one. The blue is the market cap. So this is the gradient over a 14-day period. And you can see that as we rally into a serious peak, a blow off top, the market gradient basically goes to the moon, right? So that's what this is saying. And you can actually see here, if you think about this from a divergence perspective, these peaks are getting higher and higher and higher. And what that means is that the slope of the line with each rally and pullback, the gradient, how much acceleration that it's got to the moon is essentially increasing each time. Now, the realized price is obviously a much slower, smoother, it doesn't go through these huge spikes. But you can see a very similar thing. You're getting this increase. So the way to think about this, the height of these spikes is the magnitude or how high the gradient is going. The higher this peak is, this little mountain, the higher the mountain, the more the gradient is curling upwards. And when you look at these peaks one after the other, you're starting to see that there is actually a momentum. So you get two bits of information out of this. You get how steep is the height of the mountain, and the rate of change of these peaks, how much the peaks are increasing or decreasing over time, is what's called the acceleration. It's how much we're getting momentum to the upside that's starting to really sustain it. Now, let's look at this now from where we are in the current market. We've got these higher peaks that are non-trivial, right? We're not down here in this low period. We're starting to actually build momentum. And that means that after each pullback, the rally that we're getting has a little bit more juice and power to it. And this is really positive. This is what you want to see. You want to see more power for each rally that comes forward. Now, there's this last one called the delta gradient. Now, the delta gradient is basically taking the difference. So subtracting the market gradient from the realized gradient. So don't worry too much about the logistics of it. What it's basically saying, what this does, the purple line, to simplify, so all of those concepts still apply, but what the delta gradient is telling us is simply when it's above zero, it means that it's trending higher, and I've literally colored the chart green, means that we're in bullish territory. When the delta gradient is below zero, it means that essentially the market price is going down faster than the realized price and is generally bearish. So when you actually color code the chart, based on that, purely delta greater than zero or delta less than zero, you can see that we're actually picking up the vast majority of up and down swings. Now, clearly there's, on the reaction back to the upside, it takes time to react. And this is that 14-day. If you did it over 2 days, you get it faster, but more noise. That's your trade-off. But you can actually see that it picks up the vast majority of, if you were to buy on green and sell on red, you'd probably do okay if we do a back test. Now, the thing that gets me pretty excited is, first of all, you can see these peaks are starting to increase and the low peaks are starting to decrease. That means we're getting less momentum to the downside and increasing momentum to the upside. This is starting to say we're moving into a faster pace. So this is what you're looking at. To me, this is really telling me that we are moving into second stage bull market. You can see that we went through this phase earlier here, and pretty much once that momentum started, it was off to the races. You see that each of these, we're getting this spike to the upside, right? So we're starting to get this momentum. Now, initially, let's zoom in to this here. Let's bring price down a bit. Should be network cap. So you can see here that we actually broke down below. So delta gradient went negative and we got a few red candles in through here. And the important thing to notice here is we had our break lower, started to go red, could start to signal that we're going to turn around. We've now gone green and delta gradient has now broken back to the upside. Again, this is really starting to signal, and also at a higher low. So if we get another breakdown, my view is if we get one more failed attempt and we lose this particular level, yes, the momentum is now swapping to the downside, and yes, we're probably going to get a pullback down to something a little bit deeper. The evidence that I'm seeing at the moment is saying there's so much strength that we just keep setting higher lows on these gradient levels. And it's telling me that we are now more than likely going to be heading higher. So this is a momentum play. And this particular metric is really telling me that story. That is what I want to see from a bullish market, is less negative momentum, more positive momentum. So to me, this is actually saying, look higher. We're consolidating at 20,000. We've got momentum to the upside. It makes the narrative actually fits with the market sentiment that we've had in the past. So to me, it's remaining to be happy days. And we had a fairly similar story on the 140. So this is the long one. Now, the reason I've chosen 14-day for Bitcoin is because that's the difficulty cycle, and 142 days is just simply 10 difficulty cycles. So there's enough time for miners to run through, and if they're moving from bullish to bearish or adjusting there, whatever, 140 days gives us enough time. And you can see a similar story, right? So let's look at this previous bear. You can see the momentum went from negative and moved into the positive realm, supported by increasing price. So actually, if you had a bought right here where the delta swapped over to green and then held it, you would have bought the absolute, ignore this capitulation because no one buys the capitulation. You would have bought this point right here. And likewise, as we broke above here, this was that April move. That was our signal that we're moving into bullish territory. We've now broken back above. You can see the higher highs. So we're getting more momentum on a 140-day basis and higher lows. So momentum is most definitely moving to the upside on the big dog time frame. Again, this is telling me we're moving into the next stage of the bull, and I would be buying into dips fairly aggressively, because I just think that there's so much momentum in this current play. And again, I've never seen anybody use a metric like this, and I'm surprised at the magnitude of the signal. I did develop the gradient having this kind of concept in mind, but the actual level to which it gives you these almost buy-sell signals is, to be honest, quite remarkable. So, happy days on that. But this is momentum, right? This increasing higher highs and higher lows means we're getting higher gradients each time. Happy days. BTC mining metrics. So within here, similar. So we've got the difficulty ribbon. So I'll go to pricing. We've got valuation as well, but we'll look at pricing here. Now, the difficulty ribbon is, imagine Plan B's model where he's done his linear regression and, found his R squared of 90. It's actually 90. He likes to say 98, but it's if you actually run the calcs, it's 90. The difficulty ribbon is doing the same with difficulty, and difficulty is far more correlated than stock to flow is. So this is essentially saying, I'm going to turn off all of these ribbons just for now. So the difficulty price, I consider this to be the absolute fundamental OG fair value metric. This is the cost of production. This is how much, if you summed all of the ASICs, all of the logistics, all of that kind of stuff. This is saying that I think on aggregate, Bitcoins are being mined at $10,300. That is my gut feel. I think that the difficulty regression gives you the absolute best fit, because difficulty only ever goes up with price. They're both logarithmic. They're tethered to each other one-to-one. To me, this is saying that the fair value model price for Bitcoin is $10,400. Yep. So that's what essentially the difficulty multiple is telling you, or the difficulty price. For convenience, I've added in here all of the actual difficulty ribbon. So I'm trying to get as much information into these things as possible. And what this is saying is you can see your difficulty ribbon, so you can use that to pick your minor plateaus and things like that. But I've also used the probability charts to set these different pricing levels. So we can start looking at, if we're going to get into, what is that? That's a sell level. So that's 90%. That means that there's a 10% chance it's been higher than that. This is basically saying 33,000, and then our top here would be 52,000 or thereabouts. And 52 being at a 95%, so only 5% higher than that. But we know that through bulls, difficulty expands. So much like all of these on-chain metrics, the further that we go up, the more the difficulty will more likely expand. The more that difficulty expands, the higher that these price targets start to move. And that's how you get these trending markets that eventually tag these tops. And you can again see that topping level has hit every single peak. So what's really useful about all of these tools is you've now got confluence. You can look at a number of these different metrics and start looking for areas where we're moving into blow off top phase, where we're getting confluence in, unprobable outcomes, or, previously we would have pulled back, so on and so forth. So you can start using these in combination with things. We might move on from the Brock subsidy model. Pure multiples more or less telling us the same. So this is a view on miner income. This is saying that their income is, down here at $12 million a day. We're currently trading at 15 million. So in theory, they're in profit. Good for miners. And in fact, that profit, we'll look at a metric in a second that kind of justifies the fact that yes, the miners are in profit and they're actually not selling, which is positive. And mining pulse. So the mining pulse is looking at block times. It's probably less relevant in all of this because we get a lot of oscillation here. I think this might be a metric for another time. So just to close out on Bitcoin, so that gives you a bit of a view of all the metrics that we've currently got for BTC. There's a whole lot more that I want to bring in for hodl waves and various supply metrics, and there's a few more things I need to build, but that gives you a bit of an overview of what we have at the moment for BTC. So just to close out on Bitcoin, three things, sorry. Where is it? This one here. So this is exchange reserves, coins on exchanges. And, we had an initial, we've come up here to 20,000. We had a little bit of an increase and then we're back into the downtrend. So these are coins being withdrawn. Again, we've got huge institutions stepping in, less supply, coins being withdrawn, bullish support across pretty much everything that I've seen. We've got momentum to the upside. I am really, really struggling to find a bear case right now. I really am. I think short term, we get volatility, but I really do think that we are headed north. I think that there's very little that I've seen that's suggesting otherwise. If we look at miners, so this miner position index, and by the way, Crypto Quant is a nifty news site. Actually, it needs to be included in my sources metrics, as does Check on Chain. But this is actually really good. I like Crypto Quant because they have these two metrics, which quite honestly, the only ones I care about besides the ones that I've got plotted up myself, is miner flows and exchange flows, right? They're the only two metrics that I haven't got the data for at this point. I think I can get it, but that's the only one I haven't got yet. And basically, we've got it in Crypto Quant. So this is a useful charting index, and it doesn't have the Glassnode thing where they chop out the last month of data. You can actually see all the way to the present day, which is excellent. So the miner position index, this is saying the ratio of BTC leaving miner wallets to its 1 year average. So values above 2 or positive values indicates that most miners are selling. So 2 is one of these values. 2 is up here. This is saying that everyone's just bailing out. We got a little bit of selling up here. But we're now in a point, this price there, where we're actually getting position indexes dropping. So miners are actually hanging on to their coins. So again, thumbs up, constrained supply in exchanges, constrained supply from miners, positive momentum. We're in the belief stage. It's consolidating its support. I cannot see a bear case right now. And very interestingly, so this is the last one we'll look at, is open interest. So open interest on BitMEX. So BitMEX is a bit of an example for all of them, but they all have the same pattern. This was before the collapse in March, where we had 800 and something billion, $1 billion worth of open interest that then was unwound. We really never recovered to that, and in fact, even in this rally here, we still have relatively low open interest, and it's only just starting to increase. And I would suggest that there's quite a few people who are getting short here, who just quite honestly don't have the edge. They think, it's overextended. It's gone through a huge percentage gain. It's got to pull back. I just don't think it's going to pull back. So there's a potential that there's going to be a short squeeze in this. What we should actually do is look at the ratio of shorts to longs, but I'll leave that in your court. So this is telling me that we actually don't have a great deal of open interest. So this is retail spot driven. This is a hodler's rally. This is not an open interest rally like we saw in 2019. This to me is genuine accumulation and buying, and I think the narrative supports that. So that gives you a bit of an idea about where my head's at with all of this. So if we now look at DCR, aware that we've been going for about half an hour now, so I'll touch. In fact, let me touch on two things for DCR. Let me go here to. I released a newsletter for our network. And to be honest, even I was very, very impressed with the data that I saw. I wasn't actually going in there expecting as much as what we got, but I ran through some of the network value, and I found a bunch of all-time highs. Basically, everything on chain for DCR is at all-time highs. So we had a all-time high on the total volume that was transacted on a single day. So 5.16 million DCR on a single day. That's 40% of circulating supply. Now, bear in mind, many of those coins would have gone through a mix, then gone into a ticket mix, then got sent, and then got voted, right? So there's a lot of the same coins being spent. But irrespective, it's still an all-time high because on every day that's happening, right? And you can actually see the magnitude of privacy mixing to ticket flows to regular transactions. So, we've broken above the realized price in USD terms and held it. We've broken above on all-time high volume on the chain. And you can see here that previously, once we get above, we tend to hold. So, we were really beat down trying to get through that realized price, but we now have liftoff through the realized price. We've held it for a number of weeks on all-time high volume. This is pretty positive. We hit 3 all-time highs when it comes to staking volumes. So, you can ignore this guy here because technically, this is a new stake diff algo. So you're kind of comparing apples with concrete, right? They're two completely different things. The algo just simply doesn't function the same. So you really can't compare the two. So we had 2 all-time highs on the ticket price, and Nino's been saying for a long time that he wants to see strong ticket buying. Well, there it is. There's 2 all-time highs on ticket price, 188 and then 190. And then we also had an all-time high, which it's more or less held up at the 54%, but it's down about 53%. But this is saying a greater volume. So the nice thing about supply staked, yes, the all-time high on ticket price can go up, but you can see that, we've had lots of all-time highs because it's been an upwards trend, right? As more coins come into circulation, people can buy tickets, with higher volumes. What this is actually saying with supply staked is a larger proportion of the total supply is now being staked. That is a super bullish signal. And you can actually see the magnitude of it. It's non-trivial. And you can see that we've kind of plateaued for some time, and now we're getting a real spike in literally the volume of coins, because a lot of people will stake, they'll vote, then they'll restake. These are new coins coming into stake. So again, super positive on 2 or 3 all-time highs on the staking volume. So this is our CoinShuffle Plus. This is the privacy mixer. You can see that this was our long-term average while it was client, command line only. We're now moving into the phase where there's release client wallets for Decrediton, and my understanding is that they probably won't do a release client 5. It's going to go to just straight 1.6. So very soon we're going to have the next implementation of Decred come out. That's going to have the code in there to start voting on the on the treasury spend opcodes and the consensus change. And it will also bring Lightning and CoinShuffle to people's wallets. So since August 2019, when it launched, we've had 45.6 million DCR, which is only 12.3 million in supply. So it's about 3.8 times the total supply that's actually run through the mixer. And again, obviously there's repeat coins there for obvious reasons. But we had an all-time high of 272,000 DCR mixed in a single day. And you can see that our 30-day moving average is actually, this was about 100 to 110. We've jumped up to about 147. So we are getting sustained long-term extra mixing going on, which again is product market fit. DCR DEX, this one quite honestly blew me away. So we've got DCR DEX price in blue, and we've got Binance price in black. Considering it's, I would think that DCR DEX will be relatively illiquid and few people using it. The user interface is certainly not ready for plebs to use. I haven't got it spinning yet, but if the actual price is managing to hold very similar to the Binance price, which is great. And in the same time period, Binance has done 1.96 million DCR over 48 days. DCR DEX has done almost 600,000. So that is 30% of Binance volume. So DCR DEX in the first month and a half of operating is basically doing 30% of Binance volume. That's pretty impressive. I was extremely surprised at that, but happy days. That again is product market fit. And the nice thing about this is actually pulling, this is a magnet. So people on DCR DEX are willing to pay a little bit of a premium for the KYC free. People are buying coins on Binance and then selling them at that premium on to people who are. If you're buying on DCR DEX, I'm going to hazard a guess you're a long-term holder. You're not buying for the a 5% pump. So it's actually going to start pulling coins off exchanges, which, it's good for price, right? The less coins that are there, it's the same influence that we have for Bitcoin that we talked about earlier. And early days, but Lightning Network is live. So there's 26 nodes, 47 channels, and just under 12 DCR capacity. So, this is pretty cool. I still need to go through the motions of actually playing through and using Lightning Network. My focus has obviously been on getting this website spun up. But, I'm looking forward to actually getting in there and opening channels and seeing how it works. I know that the user experience of Lightning at large is not great. And that's for Bitcoin and Decred, but it will improve. It will most definitely improve with time. And the fact is that Decred is the only chain that's taking Lightning seriously next to Bitcoin. Very few other, in fact, I don't know any other chain that's taking it seriously. And yet I think that the magnitude of benefit that's going to come out of it is substantial. So that's a bit of an overview. I'm really looking forward to getting you all into this website and playing around with some of these metrics. Let me know if you catch any bugs or any charts that have the wrong labels, or it's showing market cap and it should be showing price on the axis or something like that. If any of the links don't work, let me know. And I'm really, really excited to get this going. I really hope that it adds a lot of value to your toolkit. I think particularly now, once I start really building out the modules. And running through each of these charts one by one, and the best bit is that I can now just run through this website rather than using PDFs and things. I can just show you my charts in the real, because I think that's going to be way more interactive. So looking forward to your feedback. Really pleased to get this out the door, and let me know if you have any questions. Cheers.